Hi, I'm Lee Stone and this is your UFXBank Week in Review. Today we will be discussing some major financial events of the past week and how they impact the global currency markets. Before we get into that, though, let's go over last week's risers and fallers. The euro rebounded this week against the dollar, gaining nearly 2.6% and last trading at 130.36. The British pound also enjoyed a bit of a bounce back versus the dollar, finishing the week up 1.75% and closing at 156.22. Intervention by the Japanese government caused the yen to drop significantly against the US dollar. The yen dropped nearly 2% for the week to close at 85.82. The US dollar had its third down week versus its Canadian counterpart. The pair traded mixed through the week, finishing down 0.37% and last trading at 103.16. Oil prices tumbled this week, dropping 3.65% to close Friday trading at $73.66 per barrel. Gold, on the other hand, had a huge jump on the week, setting an all-time record at $1,282.75 per ounce. In Friday trading, this happened before retreating to just under $1,276 an ounce. Overall on the week, though, gold gained 2.5%. Something staggering, I would have to say. But the news this week was all yen. After a much publicized deliberation over the matter, the Japanese government finally took matters into their own hands and forcefully influenced the price of the Japanese currency. Since this was such a major development in the week, let's go now to our analyst, Martin Smith. Martin, how are you?
Fine, thanks.
So, Martin, clearly this is the biggest news of the week. Can you tell us what happened?
Well, as we've been discussing for some time, the yen was soaring to prohibitive levels against the dollar, and analysts have been speculating that the Japanese government would eventually intervene. Well, this week, they did just that. The announcement came on Wednesday and caused the yen to drop dramatically against nearly every currency that pairs with it. The yen slid nearly 3.2% against the dollar on Wednesday trading alone, and the euro rose 4.6% on the yen before adding another 2.8%, going up to 130.39. So, well, it's estimated that the government of Japan may have sold up to 1.8 trillion yen into the market. To give you an idea of what that figure means, that's equal to about 21 billion US dollars.
Now, with the election results, this came as somewhat of a surprise, didn't it?
It did, yes. The challenger was a very strong advocate for intervention, so when he ultimately lost, there was a lot of speculation that the Japanese would be holding off any plans to act on behalf of the yen. So clearly the speculators were wrong in this case.
And now it was said that they couldn't pull this off alone. Did they?
I remember we talked last week, if you remember, about this, and there were many analysts who believed that any attempt to intervene on behalf of the currency would ultimately be in vain. Well, I think the Japanese government was going to have to do something whether they received international support or not. However, the chief economist for Goldman Sachs, Jim O'Neill, has suggested that there were perhaps a coordinated effort with the leaders of the G20. As far as any official statements, of course, nothing has been released to suggest that there was coordination between Japan and anyone else. In fact, the US might even have a right to be upset, considering that there was so much noise in Washington already over China's unwillingness to let the yuan rise. You've also had some world leaders and policymakers expressing frustration over the Japanese's unilateral moves in the currency markets. So if there was a coordinated effort, they're doing a good job of sending mixed signals. So
has the Japanese intervention worked then?
Well, it's probably too early to tell at this point, isn't it? But clearly there were some strong market reactions. There are still many analysts who believe that, like the Swiss, the intervention will ultimately fail. Although according to a Bloomberg survey of 39 economists, the median consensus was that the yen would lower to 88 by the fourth quarter and to 90 in the first quarter of 2011. The government has also suggested they are prepared to continue their efforts if necessary to ensure that the yen's appreciation remains moderate. I think we'll see some short-term reversal, but it will be difficult for Japan to keep the yen from moving on its natural course, whatever that may be. If market forces keep pushing the yen higher, I find it hard to believe that the Japanese government will win out. If other market news over the next 6 months supports a return to higher risk investments, their efforts could prove very successful. Remember, it's important for an export-based economy to have relatively low-valued currency. If the yen drops, the exports will increase, and this will foster confidence in the Japanese recovery.
Thank you very much for your analysis today, Martin. We hope you enjoyed our weekly review, and we hope you will join us next week. Until next time, be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can follow us on Twitter and Facebook. To submit your questions to our weekly broadcast, please email your questions to Martin Smith at askthebroker@UFXBank.com. For UFXBank, I'm Lee Stone. Good luck and happy trading.